Hi, Warriors. It's not Friday yet. Hi, RC. Brand, how are you? Marcus, AJ,
Boy, I
Ryan,
wish it was Friday.
Kman, aloha. You're in Hawaii now. Ryan, it has a
Yes.
hangover effect. And okay. All right, everybody. It will be Friday tomorrow. I promise. Okay, so pretty wild day we had yesterday. And just want to go over it quickly that since the beginning of December, I've been saying that the universal narrative accepted, embraced was that the market was fine until the end of the year. Okay, every people that were looking to sell were going to wait till the end of the year. Shorts were going to wait till next year. A lot of guys aren't even short yet. They were looking to do it higher, 62 to 64. Um, and also said that December was a great month because it thinned out for a bear raid. Well, that candle's a bear raid. That changed the character of the market, even if the market could regroup and blast off to new highs again. I know that there are still guys thinking that can happen. All right, so that's it. Forewarned. In December, we'll see if it turns into a meltdown or one thing for sure, the character of the market has changed. This range, I mean, even if you look at it daily, it's one of the biggest candles on the chart. It's like a different ball game. I mean, it's bigger than this. I can't find a bigger red down day than what we just had. So, what they say, markets top with violence and bottom in silence. Yesterday was pretty violent after basically the market got what it expected, right? We were talking here, the whole team was talking about a hawkish cut. I guess that's maybe he was even meaner in the presser. I didn't watch.
He was
So
definitely more grinchy. Yeah,
he was
was.
mean.
He was
Uh,
he was he's just is just way more hawkish than the market was expecting. When you go to, expecting four rate cuts into 2025, and then everybody's thinking, okay, maybe three. After the dot plots and his comments, now the market's wondering, is there going to be two? And are we going to skip January? So that's a pretty big shift. It's monumental enough to elicit the response we got yesterday.
okay, yeah. Do you think the market can regroup from here and generate another high?
I don't think so. And I was definitely in that camp. I'm licking my chops. I've got, I kind of refunded because I move, money around. I kind of stepped up my size to my options account, and I was really like waiting for January. But now that I'm sitting here, it's like, I don't know, Dale. Well, we came out of that wedge, and now that we've come out of that wedge, I think selling rallies is the way to go. But yeah, I don't know. It's end of year, man. So
Okay. Well, we're getting that end of year effect that Kman was talking about. I don't think he's here today.
I
So,
am.
oh, you are okay.
I wished you aloha from my
Oh
private.
my gosh. See, all right. A metal started off higher and they're giving something up, and
Yeah.
you know, I don't think the euro is there yet, but it's getting closer. Um, yeah,
Jim
I
Jim
can't.
was looking for one more. I was wondering where he was going to call that five. He was looking for one more push higher in the dollar index, and we're basically there. But can we even reach further? I guess.
Yeah, I've been talking 109 for about 2 months. So
Yeah.
yeah, I think we're all. Yeah, I think we could stretch to 110.
No, it's a good call, Dale. I was not thinking that could happen, but boy, good call.
Yeah, and pretty good correction though happening here. Getting a pullback there, and commodity currencies. little reversal day there. But I'm just going to wait for 109 to 110, and people talking about parity in euro. I think it holds above parity. So that's kind of what I'm thinking into early next year. I think the dollar top takes until next year to get up there. Um, I mean, how many days do we have after tomorrow? Full trading days, 6 in the next 2 weeks.
Well, that comes into question, a conversation I think we all should have. And I know Ryan and Kman did through the flow show. I caught like this. I was actually awake. I caught like half of the flow show, but we have end of year flows, and so could that be violent enough? And I guess ask these guys their opinions here. Could it be violent enough where we see some dollar selling into year end to a point where it creates the actual top for the dollar just because of year end flows? So,
yeah, and I think we got the answer in the bonds yesterday. They look ugly. So I don't see anything turning. It may be oversold bounces and stuff, but I don't see any sign. There's a little divergence here, but it almost makes me think that I see some stuff at 87 on the weekly, but if it gets through there, there's new lows coming, big new lows. So here's a lot of people are calling it head and shoulders, with this being the neckline. Well, if I want to, look for something, I could go, well, this is the left shoulder. This wasn't the right shoulder, but now we're digging one in. But to me, it looks like we're going to challenge these lows um, of 80. You just take 100 from 90. We start closing back under, and we are. That measures 80. So yields, besides maybe a little breather, you know, the market was wrong that yields were going to ease up. This was a pretty surprising move in yields. I've never seen it in my career. The first cut in an easing cycle being a pretty big one, and that being the low of yields. So,
Happened before.
You've seen it before?
Yeah, it happened before. And usually, when the cuts happen, it is possible that for the first like 3 to 6 months even yields turn. But it all depends on the reasons, Dale, right? You have to back it up with data on the one hand, and if you look at yields, because you're talking about the yields now, there is a difference to make between the current situation and future expectations now. Because if you look at the 2 year, which is a kind of the closest to the Fed funds, right? It is bang in the middle of it is around the midpoint of the Fed funds, around 432, unless my screen is frozen. But then the longer out, though they are expecting a potential inflation spike or the advent, trading the advent of the orange madness coming, and that's where the differences now lie. There's been a pretty decent downside in the 10-year futures being bought, so people are still thinking that rates could go higher in the new year.
Yeah, that's the way it looks.
Well, yeah,
Challenge it.
it does look like it. So I mean, the thing is about, and then to come back on what Blake was saying about the year-end flows, we have to be a little careful, because if the stock market doesn't stand up in the next day or so, a lot of those year-end flows may disappear actually, because the stock market is coming down, which is one thing that influences FX neutral funds year-end flows. So we need to be a little bit careful now with the year-end flows after that move yesterday in the equity markets.
So what are you saying, Kman? Because we saw this
When
correction,
when you have
I
but
would give you the charts, Blake.
when you have a
okay,
when you have a big divergence between US and especially the US, because that's the base, right? Because it's the
yeah.
big market, and that's where the most people are invested in. So if you have a big divergence between US markets and especially the S&P, because that's the most popular one, although we could argue that Nasdaq has been taking chunks out of the S&P. But you compare them to what the rest of the equity markets are doing worldwide, and then you bring that over to what it means for FX neutral funds for their investments. And if you get a big divergence, US assets outperforming the rest, it usually creates an overload of dollars in FX neutral funds books. So they need to sell those dollars. But if your stock market in the US goes down, you can also understand that it reduces the need for this this rebalancing, because you got less dollars in your portfolio.
So what you're saying is, and let me just use like a direct correlation here, just of what you're seeing on our charts. Prior to yesterday, and yes, this is the S&P. It's in red. You can see it right here. The S&P obviously corrected yesterday. The dollar rallied as a result, not as a result, but result of the Fed and the rhetoric and everything else. So if equities can't retain their bid, and we're just talking now over the course of the next 24, 48 hours, let's say the stock market continues to sell off, and Dale pointed out there's a nice little ascending wedge. We played it yesterday in pattern and play like intraday, which is nice. But it was really fast. But if we get a continuation lower, that might be the ammo that the dollar might actually continue to extend higher, because the U.S. equity markets didn't pull back. Is that correct?
Yeah, that's correct. So
Okay.
Yeah, that's correct.
Okay. So you would continue to see that'll be interesting. So I guess, I mean, and now you've managed a lot of bank end of year flows. My assumption is, with your time on the floors, at the different banks that you've traded at. At what point do they start making those decisions?
Oh, they're making them. Well, I mean, the thing is, it's a bit strange this time, because we had a big amount of central banks all concentrated in a week's time. So they may have waited for some of those flows to be over the FOMC, especially hump, and perhaps for those who have sterling to do, perhaps waiting for the Bank of England to be done as well. But usually they would have already started, and that's why sometimes when you got like big years, very big years, you can see it already starting in November. If you look at last year, for instance, the problem is this year is that on top of it all, we had an election in in November. So it's very unclear when those hedges would have started. I reckon they've already done a part of it, but if you get big variations in equity markets at the end, right at the end in the last week, it may throw around the imbalances a bit, and actually change sometimes the picture. Imagine that you lose another 5-6% or so in the S&P. You may end up actually reversing the whole thing.
All right, and you talk about another 5 or 6%. Now, let's. And Ryan, I see you there. Steve, I see you there. So don't worry, I'm going to come to you guys. But we're wrangling with this government shutdown. The stopgap bill, kind of failed after Trump and Musk, jumped on social media, and it looks like the government's going to go into a shutdown. Now, this is expected. I don't think it's unexpected. But I'm wondering if this little bit of a worry here at the end of the year, would this be a catalyst that just suggests to people like, look, I'm up pretty good for the year. Let's just pull the plug and wrap up our books, especially coming out of this wedge. I mean, the S&P looks like, Dale, we could reach for maybe 5,600, which would be channel support inside this big channel. It's not like the uptrend's disrupted. Well, maybe it's slightly disrupted now, but it's not like, it hasn't changed anything, right? So anyway, just some food for thought as we head into the end of this week. So let's ask Ryan real quick. And good morning, Ryan. How are you?
Yeah, morning, mate.
Hey, I feel like I've heard a lot of you this morning, just because when I got up, I said I'm not gonna take my walk this morning. I'm gonna go listen to Ryan and Kman, and caught the tail end of your show. We had a lot of central banks overnight, and we'll go back to the Bank of Japan. But Bank of England, you saw the sterling get, kind of wiped out there following the Bank of England decision. So what happened there?
Well, they stayed on hold. The vote was a bit more dovish than the market was expecting. Expectation for a 8-1 or 7-2 vote. They came in 6-3. So some people are fearing that the economy is not doing as well as it ought to. And I've been saying that's what the rock and the hard place is, that the BOE's in between. Do they fight sticky inflation, or do they fight weaker growth? And it looks like that fight is developing among the NPC members. So yeah, but so we got a bit of more of a dovish vote. But Bailey, in his comments in the statement and whatever, was less dovish. He doesn't know and can't commit when they're going to cut and by how much next year. And yeah, he says a gradual approach to future cuts remains the right path. So yeah, there's a fight going on there at the moment.
And I look at this daily chart, and it seems like sterling's walking a pretty fine line here. But these dovish comments and the reaction of the sterling following that news, it's putting this ascending trend line pretty much in view. Let me ask you this about the dollar's reaction and the euro's recovery. So we've seen a recovery in the euro overnight. It's stalling at the 50% retracement. What do you make of the dollar's move, and do you think that the euro eventually breaks this 103.30 level, that spike low following the French news a couple weeks back?
It's a spike low, but it's a significant level down there, as I showed last night. It goes back years. It's another one of those catch-all levels that you see having an effect now and again. So it was very significant that we hit that level. Didn't quite get as far as that November low, but we bounced from there. That was enough to get me trying along. And yeah, it needs to get back above and hold above 104 first step, then 104.50. If it can't do that, then the downside is in play, and a further move below that 103 lows is absolutely possible. But yeah, I don't know. It feels like a bit of an overreaction to last night, but then look how stubborn the euro had been around 105 for the last couple of weeks, and it needed something to shake the tree, and that's what it got. But as I say, significant that it held just above that prior low in November. If you want perfect price action, that's it.
All right. Well, we are patiently waiting to see what the euro is going to do today. I think it's going to be a pretty big spectacle here. Steve, you've been monitoring from afar a little bit, and you've seen what the euro's done. You've seen what the dollar's done post Fed. Let me see if you're mic'd up here. Did you have any comments that you wanted to add to the dollar and what has happened with the FOMC?
The dollar was looking well positioned for strength yesterday. That's what I said in the morning edge. That, a lot of the markets were really nicely positioned for a dollar bullish outcome. I said that, of course, this doesn't have a predictive power, but, that's how the charts were looking like. And that's indeed how things evolved. We got the dollar rebounding from the channel that has been followed since the end of September and has led this move higher. It has opened the next upside target, which is a 61.8 at 109. And what I also said yesterday is that, of course, if indeed we get a bullish dollar outcome, that is obviously going to be bad news for equities, right? Because what would make the dollar move higher would not be appreciated by equity traders. And that's how indeed things worked out. Am I surprised? I'm not really surprised for multiple reasons. I mean, if we want to look at it from a more fundamental perspective, inflation has been sticky. Inflation has been remaining way above what's supposed to be the target. At the same time, Trump got elected, right? And Powell, 95% is not going to have, his term renewed. So, I mean, isn't that the ideal situation to do the right thing? Be more hawkish, that is, because they're not really ever going to do the right thing, because all these people tend to do the right thing when, there is no political pressure or no political reason for them to do the wrong thing. So all in all, I'm not that surprised. And yes, I do think that yesterday's developments have a very good potential to have, a more long-lasting effect for at least,
Another
a
day.
few weeks. Yeah, I mean, that might as well have, signaled some kind of a high in equities for the time being. So, yeah, I do think that, following yesterday's move, the long equity proposition is now dangerous, and that I'm saying that from a technical perspective as well. We had started seeing, and I kept talking about it, a big divergence between the Dow. It started as a very discrete divergence between the Dow and the rest of the US indices, but it ended up extending too much. We had 9 consecutive down days for the Dow, while the other indices were either hitting new all-time highs like the Nasdaq or consolidating near their all-time highs as the S&P. But that divergence in the Dow kept unfolding more and more, and it started becoming more worrisome. Then we had an ascending wedge in the case of the Nasdaq. We got a little bit of an overthrow. I said that, listen, if the Dow is right, this might end up being a little bit of an overthrow. And with yesterday's move, we sliced back within the wedge. And in fact, we're now testing the wedge's trend line support. And given the fact that the Nasdaq has been the steam engine, if we also get the Nasdaq to fail through this trend line support, I do think that in essence we solidify the beginning of some kind of a move lower, right?
All right, and that's that trend line that you see right there, guys.
Yes.
All right, very good. Thank you, Steve, for your comments. And I want to say, good call on gold. You did the chart of the day, which is a free chart. It's our blog, and you were talking about gold looks like it's ready to weaken. And
obviously that also indeed opens the next leg lower for the metals, right? The metals obviously didn't like that either.
Yeah, and I'm seeing it as a channel right now. You can see this ascending channel. We had a bit of a throwover, I guess, a few weeks ago or whatever it is. But we have the channel supports coming in right around here about this 57
I doubt it's going to hold
2570. Well, yeah, and if it doesn't, it looks a little dangerous.
I'm looking for gold to dip down to 2473. That's my target. That has been my target for quite some time. I think that then might produce a very nice buying opportunity.
All right, and that's right over here around the 200 DMA.
Yes,
by the way,
that's also the 61.8 of the move higher that began in spring. That's also a horizontal support resistance area. So that is also the extension of the first leg lower from gold to what might be now the second leg lower. So it's a like quadruple confluence of supports roughly at that area, 2470 something.
Okay, yeah, it's 2477 as far as I can see. And like I said, the 200 DMA is right there. Seems very logical. Let's since we haven't talked about it yet, let's talk a little bit about the Bank of Japan. Kman, I mean, could Ueda have been any more dovish?
Yeah, we were talking about that on the Flow Show. It's a bit of a nightmare about what he's done. Of course, there were a few messages sent out before, but you can't talk for months that everything is going according to plan, and then all of a sudden turn around and come over uber dovish, and now pushing everything back to the wages and what's going to happen once Trump takes the seat. So that may mean, if you believe his words, that even in January they won't move. But yeah, I we were talking about it. It's a bit ridiculous, to be honest.
Kman, does that actually mean,
What?
in your opinion, that in essence let's say some kind of invisible ceiling they had put for USD yen is out of the way now? Because they've intervened a couple of times
Mm,
to tame the strength of USD yen,
mm,
and we're now getting eerily close to the levels they've been intervening in the very, very, very recent past.
yeah. Yeah, but the thing is, I think we need to make a distinction because I was also saying on the Flow Show, let's not forget that Bank of Japan is probably the least independent central bank of all the majors. And they just signed a very big stimulus package over there yet. And so he may have, because we just come out as well of the special diet session over there, and he may have had perhaps one or two whispers in his ears to go slowly. About interventions, I think we need to take it a bit different. Did they take the lead of dollar yen? That will depend on the MOF. MOF can still come in and say like, okay, imagine that we raise back up to 160, 162 before year end, for
I mean,
instance.
we will if they keep it on like that, right?
Yeah. Maybe they know something about the year-end flows or so that's going to cap it. But I was also saying, imagine that you're sitting at GPIF or Nippon Life and stuff, and you're hoping that the Bank of Japan is going to bring rates up to where it's interesting again to invest in Japan. They just got like a rude awakening because Ueda says maybe not so fast. So and they are waiting to bring money back into Japan to get some real yield on the JGBs. So that may mean that those guys are not going to do that, and that mean you actually may see even more outflows and that they are going to invest abroad again. And that is going to put even more pressure to the downside on the
Of
Japanese.
course, because they will have to be selling their yens to buy other currencies.
Yeah, they will probably do it on a quite high level of hedged. Okay, so they probably will hedge a lot, but yeah, they will see.
Yeah, but not fully, I assume.
Hmm?
Yeah, but not fully. I
No,
mean, they might partially hedge.
no. We have to know that they have all quite strict hedging ratios, right? And ratios for whatever they do. They cannot go. They all have their own. And sometimes I think every 2 times a year or so, at least GPIF produces, or at least once a year, they produce their range of investment. Yeah, I mean flexibility. They say, for instance, they will invest whatever happens, 20 or 30, between 20 and 30% or so in JGBs, for just as an example, but they have the leeway to go down to 20 or up to 30. Okay, if the JGB yields go up, for instance, and they decide to repatriate money in the next investment committee, they will discuss about probably putting JGBs from 30 up to 40%, so investing a lot more in JGBs, but they will always have a kind of a range. And now, after this Bank of Japan, I can imagine that they are going to the low end of the JGB investment band and to the relatively lower side of the hedging as well, because there's very little incentive to
Yes,
hedge too much.
exactly.
So that could be what happened now in the Bank of Japan could be a complete double whammy against the Japanese yen. And then I would say MOF will have to go to work, but if it comes in such a scenario.
By the way, guys, we just got data.
Yeah.
U.S. initial jobless claims came just an inch lower than forecasted at
Forget it.
220.
Move on.
Forget it. GDP came in hotter though, 3.1%.
Philly Fed manufacturing index is a disaster.
It always is.
Coming in at minus 16.4 while the forecast was for a positive 3.
Wow.
Yeah, it's a true disaster.
Well,
The US GDP...
Are they not making enough Philly steak sandwiches?
The US GDP, though, final quarter-on-quarter reading comes in better at 3.1 versus 2.9. I assume they managed to understate inflation even more. So that's the outcome of that. But on the other hand, the price index also rebounds significantly from 1.5 to 1.9. So these are the data we just got.
It was unchanged, 1.9. But it doesn't matter because we get PCE tomorrow, and Powell told us what the numbers are going to be anyway, 2.5 and 2.8.
Well, I tell you, this silver is really ugly, isn't it? Weak dollar doesn't get it going. Nothing does. All right. I have Adam here. If we're done. Blake, you here? All right, I'm taking over.
Oh, I'm sorry. I was talking and I was muted the whole time.
Oh, all right, buddy.
Go ahead. Is Adam here?
Yeah.
Oh, he is. Okay. Well, I just want to say, everybody, thank you all for your comments. And I was asking Ryan really quick, as far as the U.S. data goes. The PCE data was already mentioned by Powell yesterday.
And EG made just a marginal new low, guys, and turned. They took out the lows just by a bit before this turn. Looking better to me. I wouldn't short this rally.
All right. Well,
anyway.
All right. I'm gonna pass it over to you guys, and I want to say thank you guys for all of your, comments. Kman, Ryan, you guys, the Flow Show just rocks. Thank you guys, Steve. Great to hear your take this morning, and great conversations on the yen. So, Dale, it's all yours, buddy.
All right. Thank you, Blake, and welcome back, Adam. My trading warrior brother, journalist, news trader.
Good to be here. Can you hear me? You got me?
Got you, Adam. Great to have you back. So we haven't talked in a while. Big red wave here in the U.S. First of all, I want to acknowledge you were very bearish Canada, therefore very bullish USD CAD the last few times, maybe even a year, 6 months or longer. You've been looking for higher USD CAD, and that was a great call. It was one of the best performing currency trades out there in the last quarter. So nice work.
I'm not happy to report on that, being a Canadian here, but yeah, it's a mess here.
Okay. So big themes that you're looking at. I mean, as we come to year end, I could share my screen and like we usually do, bro. And
yeah, sure.
And we could cover a few things. First of all, what did you think of yesterday's sell-off after the Fed in risk?
Yeah, I think it's an interesting one. I mean, we're really pointing to the Fed, right? I mean, it's got to be the Fed. You've moved up rates, 10, 15 sort of basis points, right? Compared to what was priced in. And then even if you look out at the dots, you took out a cut in 2026, but 2027 at the same level. So it's a pretty incredible reaction. If you listen to Powell, there's the dual mandate, right? Inflation and jobs. And he tilted it a little bit back towards inflation again, said they need to get inflation down. And then he had that kind of, I guess it'll be a famous line, was it kind of fell apart, like their inflation forecast kind of fell apart, he said, which is the sort of thing you want to hear.
To say.
bit of a miscommunication, I would say there.
Well, you know the old expression, you don't have to say everything you think.
Yeah, you could have put that a
I
little
think
bit
that's
more.
what happened to him, man. The cat came out of the bag the wrong way.
That's it. It did. There was a bit of an own goal there. But it's still Powell, and they're still going to cut more if things disappoint. I think inflation will come down. It is still housing services. Jobless claims. It would have been something today if they would have gone up to 260 or something like that. That would have
Okay.
really got the jobs mandate back going. And I think you do still have a Fed put there. But you have to watch inflation. I mean, it'll be interesting to see what those January, February inflation numbers look like. It's coming down everywhere else. I'm pretty sure it'll come down in the US, but not right now. I mean, the dollar's cooking. And then I think the thing that people overlooked yesterday, it wasn't just the Fed decision that was ongoing. Congress was trying to avoid a shutdown.
Okay, that was part of it, you think, Adam?
I believe it is. And for me, you're looking at Trump, right? He has 4 priorities: GDP growth, improving the fiscal deficit, the trade deficit, and keeping the stock market high. Now, in a lot of ways, those goals are incompatible.
Right.
And so you look at him and you say, okay, which guy or which of those priorities, what's the hierarchy of those priorities?
They'll change all the time.
Well, yeah, but I mean, at the core, and
All
and
right.
I think you're right about that in how he'll react next.
Yeah.
But I think the market had pegged it. Well, he cares most about the stock market. He was at the New York Stock Exchange there,
Yeah.
really right at the top, and people were thinking, well, stocks are going to be number one. But then yesterday, you have Elon Musk really in his ear right now, and Elon trying to kill that bill, and then Elon did kill it, it seems. And Elon doesn't, care maybe about the stock market as much as I'm sure he cares about his own stock, but he's on a little kick right now to cut spending. And he seems to have Trump's ear, and now they killed this, and have we miscalculated? And so not just killing the bill itself, but the idea that Trump might be more of a fiscal hawk than we thought. And if the fiscal deficit is at the top of that hierarchy of priorities, well, then you kind of have to put the stock market at the bottom.
That's right. So let me ask you, do you think I was saying that everyone universally embraced that the market was fine until year end or next year, even the bears weren't short. And that was all one way, for taking profits. I could just wait till January. Maybe they'll still be right because, I've had great signals being negated, especially in S&Ps. But do you think that we could get rolling to the downside if we do have a shutdown? And the bonds act pretty ugly too, even though there's been a huge short position in there forever. They look like they're breaking down.
Well, I don't like the look of bonds, and I think we should talk about that. But again, I think, okay, the shutdown is the shutdown, but the question I'm really weighing are the fiscal hawks in control here? And if they are, it's a whole different world. It's a problematic world for a lot of assets. But then you look at bonds, and I was surprised that long-dated bonds sold off. I mean, hawkish Fed. I know they
Right.
cut, but the cut had to have been priced in. But
Yeah.
hawkish Fed, worried more about inflation. You should think the long end would rally, especially with stocks getting crushed.
Yeah,
And
that's what I mean.
bonds sold off, and they're selling off again today.
Yeah.
And a fiscally hawkish Congress too, which should also be good for bonds. So,
And the
then
move
you look at
index.
the chart.
Yeah.
You
Go
look
ahead.
at yields, like 10-year yields, 5-year yields have broken out. The November highs anyway, not the year highs. 10s are
There's the
breaking out
10.
today.
Yeah. They
And
want that
that
5% again.
now it's year end. Year end is usually good for bonds, so there could be something there. But Japan might be selling a lot of play. Brazil's obviously selling to prop up the currency. So there's a lot of currency dynamics that may be in place there. And I hate to call it like as in we're selling bonds on a bad stock market and a hawkish Fed.
Yeah.
Like that's an incompatible kind of dynamic.
Do you really understand the move index? Because I want to talk about that because a lot of people are saying that was a reason for buying bonds because when they were selling off the move index, look at it's near the lows, which is saying no stress, right?
Yeah.
Kind of like complacency,
Well,
which to me
it's
is,
the kind of signal everywhere. I mean, you touched on it. I mean, I'm sure you saw some of the same things we did that um, people thought stocks were going to go higher. That it was a very crowded trade. Everybody was long. The consumer confidence data showing the ratio of people expecting stocks to be higher was records. Bank of America and the fund manager survey saying cash holdings were at the lowest since 2002. Bonds were hated. I mean,
yeah,
um, David
everyone's
Rosenberg
in,
capitulating,
yeah, everyone's in the pool.
and
And,
yeah,
and
that
it's going to take more than one day to get them out, even if we get a new high. You're not going to, uh, you know, uh, I don't care how long you want to call this a bull market, a 40-year or take it to COVID, 3-year bull market. It's not going to just be one down day evens up positioning because everyone's long stocks through the gill.
well, that's it. And if we find out that the fiscal deficit and the trade deficit are Trump's real priorities, at least in year one, then we get tariffs on everyone. We
Yeah,
get the Congress cutting spending way more than anyone thought.
yeah.
And how can that look good for the market?
Austerity. Let me ask you when you're talking about this, Adam, because I've had like a 109, 110 target in Dixie. It's coming off today. Um, what are you thinking dollar wise here?
Well, I actually, we usually put on the video, so I'm wearing I got this all-time high shirt on, it says.
Oh,
You can
okay.
imagine it. But
Uh,
I don't know if you could ever really call it like an all-time high. I don't really love the Dixie, but
you do
it's
like
headed higher.
120?
I mean, it is. Again, I'm weighing these political dynamics right now, but the Bank of Japan held rates.
Yeah, all
Um,
right.
and that's the big kicker here. The euro's a mess. I think we've
Yeah,
seen some energy developments in Europe that have been pretty brutal, and the automotive industry there is cooked, it looks like,
yeah,
at least
yeah,
globally.
yeah. So
Um,
you think we
yeah,
take out this 114 level? Is this
I see
what
the
it's a,
comment coming across. Trump doesn't care about the deficit. Yeah, I mean, I tend to agree. I mean, that's the baseline that everyone has, though. So I guess
yeah,
I just don't know how much you have a little bit less conviction now. And then, yeah, the dollar index. I mean, you got to think the euro's so hated. That's the only thing you worry about the euro. I mean, all the
right.
fundamentals are terrible. The ECB doesn't know what it's doing. Regulation's a mess. Cohesiveness is a mess. Politics are a mess. You can't
I
point to
was thinking
anything
I was
except
thinking of
it's
trying it down here around 102
well, yeah.
for that reason, and it's very
It's
underowned.
it's just hated. It's
Hate it.
truly hated. I don't think I see anybody saying
And
buy
it,
the euro at any point.
how about cables say another 300 pips lower, say like, in here,
Yeah, the BOE
103.
was a bit more dovish than people thought with 3 cents today. I'm I was over there just a couple weeks ago.
Oh
I
yeah,
couldn't
yeah,
get
the
over it.
show.
A pint is like 8 or 10 pounds now, which is like
Wow.
16, 18 Canadian dollars. And
Yeah, you got killed.
the prices over there I mean, like, I think 40,000 pounds is still like an okay wage over there. And if you're paying 10
If you don't
pounds,
drink.
well, yeah, they all drink. But the price is like you go to toy stores, shop for the kid.
Yeah.
It, I don't know. That's not really scientific, but they do seem to have more of an inflation problem there than elsewhere. And that's kind of what the Bank of England's been saying, right?
Yeah.
Um, but eventually, that economy is not in great shape, and I don't think labor's helping, so they'll have to cut. So that could be one where the dam bursts a little bit later.
Okay. And what about the metals? They've been under pressure. Silver really can't get out of its own way. I don't know if you can see it. But,
Yeah, the silver.
uh,
Yeah,
the metals. I was thinking, 27-ish on
Yeah, well,
silver.
seasonally very strong for gold and silver. For this period, the People's Bank of China is back buying gold, and I think
Yeah.
that's the most important news over the last 2 weeks. India did. I don't know if you saw that story yesterday. There was a report on record gold imports, and then
yeah.
it said they miscalculated, and
Yeah.
it wasn't. So that hurt gold to start yesterday, and then of course the Fed delivered the coup de grace.
Yeah, gold silver ratio still looks higher. So gold, today's a perfect example of how things have been going. Gold up 15, silver down 14 cents. I mean, I think this has followed through into the 90s.
I mean,
So
Asia came and bought pretty good yesterday in gold, although it's fading here now, and
yeah, fading really
almost
is.
everything's selling off. Though I mean, it'll be a big test for stocks. Futures still up 43 points on
Yeah,
SPY.
they're stiff. They're not giving it back like gold and
And
currencies.
bonds,
But
but I mean, with bonds and gold and the
all
dollar.
I know, Adam, this
Oh.
is a rising wedge within a megaphone. This is the S&Ps. And whether we can make a new marginal high or not, I don't know. We've had weekly divergence since July. Okay, the biggest confirmed all the way back here. It's like a 3 drive to me, up, and a megaphone off these two lows. And Elliott wave, you could go to wave 4 of lesser degree on a correction. That's here. So I'm thinking we could get a pretty good wash towards 5,000
Well,
in the
listen, like
next
I said,
month or
it
so.
is everybody's in the pool, like you said.
Yeah.
And I after year end, I worry about a lot of profit taking in like Mag 7, right? This is just at the start of last year we had it as well. Sort of
Okay.
it was like 5% moves right off the get-go because if you've got big capital gains, it's in your interest to wait till January to
Right.
sell.
Right. So they're
And
going to try and hold it together I think, for that reason. Otherwise, if they can't, people may not worry about paying taxes on because they won't have the gains.
that's a good problem to have.
That could, it's always a good problem to have. I had people in the .com bubble come to me and say, Dale, well, the I'm starting to give back all my profits. I said, well, then why don't you just get out? And they would say, well, I'd have a capital gains problem. I go, well, you should thank God. You made money, so you'd rather, and you know what they did? They didn't sell, and then they ended up having no cap. They had capital losses
That's it.
over, it's so crazy.
It's a tale as old as time. And I think people just look at it right now and say, well, I just need to hold on for 2 weeks. I mean, if I can get through
Yeah,
Friday, the market kind of is closed till January 2nd, really. Not a lot happens in that week, although it can.
it can. This is
Um,
when bear raids can happen.
and
Then, right?
but I think to buy puts through the turn of the year is on some of the highest flyers is a pretty compelling trade.
Okay, interesting. You
And
like Nvidia, maybe?
Well, yeah, any of find all the highest
That are,
flyers. I mean,
yeah,
Tesla's you're sitting on some
yeah,
pretty fat capital gains there. And the temptation, you're up 70% since the election well, just wait another, 2 weeks. And so that's where, all right, let's get into China here if you're tuned up.
all right. Well,
Copper.
I am. This is copper. This looks ugly.
This
I
is the
know you're a
China trade,
long-term
right?
bull. Yeah, it
If you
looks ugly.
overlay like the MCHI ETF on that or Chinese stocks, it's the same chart.
Okay.
And you
Yeah.
popped up and now it's fading. And
Yeah.
China, there's a lot of talk again. And
Tariffs. They're going to let the yuan go, and that was one of your biggest fears last year.
yeah,
And it's going to happen this year.
well, it's a pretty
Coming.
strong lever, and they're talking about doing that with the euro too. Even the ECB is saying that. Okay, not that they're going to do it intentionally in the same way, but all right, tariffs go up, euro goes down. Well, we're
Yeah.
still fine on trade. And
Yeah.
the laws of economics are pretty tough to break, and it's the same as Trump's priorities. It's tough to square them. But China, it needs to stimulate, right? And I think there is a
They
little bit
haven't they
more
been
urgency.
trying? Haven't they
Well,
been
like it's very like with real estate, they're saying, well, we're going to have the government buy up some of the real estate.
they need
And
to
I'm
demolish
consuming.
it like they have before. They need to demolish it.
Well,
They should have their ally Putin come and
it's
bomb a few cities in China where
they
they
might
can't
have a
sell the
war.
property. Yeah, FXI looks just like it, and this doesn't look good to me
It's
either.
like the euro, though. It's hated, right? It's hated. It's cheap.
Yeah,
It's
it's hated.
under-owned. I mean, China is still doing some amazing things. I have to remind myself of this sometime. I mean, they've built incredible cities there.
Yeah,
They've created an unbelievable amount of wealth.
yeah.
Um, and they are progressing. And that is compelling. I mean, they're winning global automotive. I mean, I think they might wipe out auto exports to every country that lets them in. From anywhere else. I mean, these
Yeah,
electric
because
cars
they're
they're
so
building,
much cheaper.
$10,000, $20,000, pretty impressive electric car. I mean, there's a huge market for that. I mean, they're going to swamp Australia, I think. That's a good spot to watch on auto exports, at least in terms. And then there might be pressure in a place like Canada
Well,
or.
then we have to be looking to buy the Aussie pretty soon here. It's getting pretty cheap. You have a view on
Well, it's a
do you
it's a trade on China. I mean,
okay.
it's not looking good right now. You're
No,
near
right.
you broke the lows yesterday,
Yeah.
and you might break
Going
the
back to
2002 lows now. So that's holding right now, but you broke it yesterday at 2023 lows.
yeah.
Uh, Look at that chart. I mean, it's not. I wouldn't sell it after how many weeks is that? About
I think
eight
I'll
out of the
try.
last 10.
So let it go to 60 and buy it back above 62 when it's recaptured. I think there's a big trade coming here. Let me
Yeah.
see. Let me see. Yeah. All right.
And then economic data,
Take
like
this
how
out
strong is
first.
the US is a question. I mean, it looks pretty strong here, but I think I was pricing in or expecting a little more optimism coming out of the election. You get the Philly Fed today. Geez,
Well,
that ain't great. It doesn't look like a
yeah,
lot of investment.
yeah.
Uh, Retail sales, like it's early. It's very, very early. But let's see what earnings look like in Q4 and what the retailers are saying about spending and um, that the housing is looking rough for next year in the US. And I've been a big bull.
Yeah,
And
you
part of
have
that was
been.
rates coming down. But if rates stay here, it's not great. And
You should
homeowners,
have on or talk to if you really want, and she's been on top of this housing story. She does your kind of research, boots on the ground. Melody Wright.
I'm writing it down.
Okay. She's got a great story of what she lived through in the '08 and what she's seeing coming now. Be good content for your. I've
I
interviewed her a few times.
good. I'll check it into it. That
All
rates
right, buddy.
it's a problem for housing.
Yeah. Oh,
I don't know. I don't know
yeah.
how we're gonna get housing going because if you look at since the election, home builders have been a
Yeah.
big loser, and they're gonna have a tough
Yeah.
day again today.
Yeah. That's what I mean. There are cracks in the market, and it's not just the home builders. How about the industrials? This is an industrial ETF. It's been peaking for a few weeks now. Not everything peaks together. Look at that.
Brutal. Well, pull up steel stocks. Like if you pull up
Well,
Steel Dynamics or
here's Freeport. I mean,
yeah,
the real economy stocks. Here's Lennar.
yeah, that's had a rough one yesterday.
Yeah,
Ooh, man.
D.H. Horton. Yeah, we're going to have a housing crisis again here in the U.S.
Well, it's an I don't think so,
I
but
don't know how it could happen with everyone being locked in their 3% 30-year mortgages unless they're just over leveraged in other things or lose jobs.
yeah, the American consumer's in a pretty good spot, but there are
Yeah,
these pockets of weakness, and yeah, the layoffs might start again. I do think that
they're leveraged. The American consumer, except for the upper 10%, are leveraged up to the hilt with credit cards or pay later deals.
yeah, they're doing well.
Yeah. So
Those pay
What about
later.
oil? What about oil in
Well, I
2025? I
think,
mean,
you Goldman had a really good report that I think is important on the macro side last week, and it talked about what happens at 70 you get down to the mid 60s and shale growth just stops. So if you kind of price out where oil is going to be, say you think $65 oil this year, well, it means shale growth is going to be slightly negative, and global, growth is going to be slightly negative. But anyway, the takeaway from the whole thing is that 70 acts as a floor. That shale producers, there's a marginal cost is really there, and the balances are pretty tight. If you get up to 80, you get more oil coming in. But if you get below 70, eventually, like in time, so 70 is your long-term floor. And
right.
it was a pretty compelling case. And then if you kind of price around, say, oil stocks at 70, I mean, there's some pretty good value there in a lot of names that
Oh
have
yeah, like
good
I mean,
inventories.
yeah, all the oils have gotten crushed, like
Just
debt.
smoked, which it kind of speaks to some of the underlying dynamics as being
Look at
not quite
Devon. Look at Devon.
Exxon, even just smoked.
Yeah,
Um,
Devon. Look at that. Once it broke down from 38.
so
That
there's a pretty strong signal about global growth weakness, right? So you need
sure
China to
is.
turn it on. You need Trump to make growth the priority. Probably
Tariffs
booty
are not
going out there.
growth policies, and it seems to be the only tool besides deregulation that's in his bag of
Yeah,
tricks.
and I think we'll find with Mexico and Canada here in pretty short order that it's just talk, that the deal gets done. Um, I don't know. Trump probably hates Trudeau. Someone wants to talk about dollar CAD in the chat there. Trump, I think, hates Trudeau, and he'd like to put the screws to him. And Trudeau's on the way out anyway, and then he'll
Yeah,
claim a victory there. We're
yeah.
probably going to have an election in Canada called in late January, early February. I think the
Oh,
writing
okay.
is on the wall there, and that's a positive risk for CAD. The outcome of any election is preordained. The Conservatives will win. They'll win a majority and a strong mandate. And that, is obviously an opportunity I think Trump takes his win. You set things right. I don't know if you're going to have a big USMCA fight between Canada and the US. Mexico, they want to keep Chinese autos out of Mexico. So right now, like I said, these Chinese automakers are going to dominate, and they're just going to build factories in Mexico, and then you're in the USMCA region, and you can export them as much as you'd like to the US. But Trump just does not want to allow that. And so that's probably something, I mean, that's a tough one for Mexico because, again, a $20,000, $10,000 car is pretty compelling
Yeah.
for their domestic voters. I think Canada will
Sell
get
your
along with the
vacation
US.
rental here, Adam.
But, I think ultimately they try to get past that. Then the market feels a bit better about tariffs, but it's going to be this yo-yo all the way through. Then he turns to
Oh yeah.
China, to Europe,
Did you
to
like trading during President Trump's first term?
I mean, I remember going at the start of it, everyone sat down and said, okay, we're going to figure this guy out and we're going to find out how to make money off it. And then I don't think anyone ever did. The signal to the noise ratio, I guess the trade was
Yeah.
just ignore most of what he says.
Okay.
But that's
All right.
hard to do on
Yeah.
an intraday basis. So
Yeah, it's impossible.
I wouldn't say I enjoyed it.
Okay.
Certainly
I'm
annoyed.
taking a poll.
But
All
back
right.
to dollar
Well,
CAD, it's not looking great. It isn't looking great, and with rates going up here, Canadian housing is very vulnerable. Now, Bank of Canada cutting, but with the Fed being more hawkish, it pushes up global rates, and that's what Canada's priced on as much as the Bank of Canada. I mean, it's gotten pretty far ahead of itself here now, but
yeah.
it's not a pretty picture, and we could get again a lot of charts look like we're in how many years have we been in a dollar bull market? I mean, you could say 3 at the minimum, but if you ignore a lot of COVID, it's longer than that.
Yeah.
And say we're in the 7th or 8th inning, you can get a real
Yeah.
blowout to end it. And
So
that,
give me the number that's in your head that you don't want to say because you'll sound crazy.
yeah, I mean, something like the euro is 95 cents, dollar
Okay.
CAD, 150.
Yeah,
Um,
okay.
and that kind of Oz
Yen,
maybe
US
sub
dollar
60.
yen,
Yeah, back up to the
162.
highs.
Yeah. Okay. All
And
right.
and I think that there's a lot of ways that
That's
could
probably
happen.
like 110, at least.
And then I think at the core, Trump, the America
Then
can
they'll
make
get
a
their
deal.
way. Yeah.
Well, they got it. They'll have to change course, or the stock market won't like that either.
Yeah. What, a strong dollar? No, they want
Strong
a weak dollar. Yeah.
exactly. So,
Well, that's what Trump wants too.
well,
And
and then if
JD.
you listen to the new Treasury Secretary, and that really went around a couple weeks ago or 3 weeks ago,
Yeah.
there's a path forward with some kind of like Plaza Accord, a broad weakening of the dollar in some way or another.
He
That
said that?
Well, he talked about, he didn't say that, but if you read a lot of what he's writing about tariffs, he said people think it's going to boost the dollar. I think it's going to lower the dollar.
Huh.
And,
Okay.
if there's a policy of lowering the dollar, and because a lot of people would like it, right? You could get the whole world on board with a weaker dollar.
Oh, sure. Yeah.
And that solves a lot of the Trump's problems, right? You get better GDP growth, at least nominally, right?
Right.
You get a higher stock market. You improve
Right.
the trade deficit. So that ticks off
Right.
3 of those boxes. Doesn't do much for the fiscal deficit, but the growth obviously does. So that might be the ultimate grand bargain, but I think that's going to not be the first thing that happens next year.
Right.
And that I think would be the playbook for 2020. Dollar weakness now, and then up top maybe in 2025, first half.
A top in the dollar weakness now,
No, dollar
or
strength now, and then
yeah, that's what. Right.
a
Right.
top later, and a pretty dramatic dollar strength maybe before that.
Yeah. Maybe it only takes first quarter and it's done.
Yeah, well, I mean, we'll see what happens with the tariffs in China and
Yeah.
everything else. And the stock market. I mean, listen, I think that'd sober Trump up pretty quick. Like you said, it dropped to 5,000.
Yeah.
I
Yeah.
do think at his core, his stock market is the number one priority.
It
Yeah.
is.
He might
I
need to be
know he's not
reminded of
going to.
that.
So that if we get down, it's basically the reason for 4,900 is wave 4 of lesser degree. And I have a lot of confluence. I have a megaphone line coming in there. I have some moving averages coming in there. So you could actually go to 4,900 and he could, Paul might really get busy and maybe some of Trump's stuff will start to work. And then get a rally to the top of the megaphone that's going to be like down the road, 7,000.
Well, yeah, I mean, if listen, if the stock market goes to 5,000 or anywhere near, Powell's cutting again. I don't care
Yeah.
what the inflation numbers say.
Yeah.
So
I,
there's a lot that can go ahead, and it's the things to watch, right? It's the corporate tax cut, number one. So that there's a talk of waiting on that, doing
boy.
immigration first,
Yeah.
and permitting on energy, doing those first. Maybe they play fiscal hawk for 6 months, right? Everybody pretends to be
Yeah.
a fiscal hawk until,
It's
it's
too
like with
painful.
Mike Tyson, right? Everybody's got a plan until they get punched in the face.
Yeah.
Everybody's a fiscal hawk until the stock
He
market.
he didn't have a plan when he walked into the room, into the ring with that guy last time, a month ago.
He didn't look good.
His
didn't look
plan
great.
was to be able to stay on his feet until it was over. That
It
was his
didn't.
plan. And I
It
don't know,
wasn't.
anyway, that was
His
kind
plan
of
was to get
sad.
paid.
It
You
was,
give him credit. He hyped it up. He hyped it up like he was going to
yeah,
be 1990 Mike
yeah,
Tyson.
yeah. He had to show his ARP card to get in the ring.
It wasn't.
Anyway,
Hopefully we can punch a little better than that
you
here.
know what, Adam? I'm confident. You and me have been through, a couple presidents already.
Well, listen,
Yeah,
unlike boxing, I think the market rewards wisdom, experience, and age.
yeah. So, we're gonna be fine. Let's have a bonanza the next 4 years. How
I
about
think
that?
I think we can catch the
Do
momentum's
do
an
do do
incredible
do do
thing.
do 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 do. That was the theme song from
We'll have a
Bonanza.
wonderful Christmas.
Merry Christmas to you and your family, bro. Really, Happy New Year, and I hope that Pips just chase you and all your people and subscribers and family, that they overtake you, and you won't know what you have all this overflow and peace.
Well, very blessed, very blessed. The kids are healthy and the
Yeah.
family's good. So
You're
take
a
it one
good
day at a time.
You're a good friend, buddy. Adam Button, everyone. You got to follow Adam, especially on news days. And you know where to find him at Forex Live. Go there, check it out. You have any new things happening for Forex
We
Live
got
this
big
year?
plans in the coming year, and I can't share them
Yeah.
just yet, but
Oh, you're
we're
like
excited about them.
Blake.
We're working. There's a lot of work to do even over the
You,
holidays here, so there'll be
you
no rest.
you guys all have secrets. And you know, us little guys, you know, hosts and you know, employees, we don't know. We're just kept in the dark. Is Santa just going to bring coal for traders that tried to get long to have their performance look good into year end and
Piled
and
into the
now
Mag 7, right?
yeah. Anyway, we'll see.
Big day today. We'll see how it goes.
All right, Adam Button, everyone. Thank you, brother.
Thanks, everyone. Take care.
All right. Take it easy, Adam.
Bye.
So that's a wrap, everyone. Went a little over. You could join the team in 10 minutes on the Morning Edge. See everyone for TGIF Friday tomorrow. You know, follow Adam at the minimum so you know what's on his mind and what he's thinking. Keep an open mind. It'll keep your account open. And if you haven't done it yet, here's your New Year's resolution. I'm going to become part of a community and serve it the best I can. Whether it's in your life, whether it's in trading, but I'm going to become part of something bigger than myself, which you are in F.A.C.E. So step it up. Don't just count your pips, count your blessings, and I'll see everyone tomorrow. Barry, you're the jester? Okay. All right. Well, I've been looking to hire a court jester for days I get stopped out. Anyone use that court jester technique to? No, I don't do that, Barry. I just put on Seinfeld. That's my therapy. All right. God bless everyone. See ya. Yeah, it will be.